Welcome to Modern Wall Street's Trader Talk. After opening with a record hit, U.S. stocks are on the retreat ahead of the Fed's announcement on a rate hike. Joining me to weigh in on the markets is Peter Tuchman from QMS, the New York Stock Exchange Einstein, as we like to call him. Welcome, Peter.
Good morning. Good morning. How are you?
I'm good, thanks. How are you today?
Okay, I'm okay. Sort of curious looking at the market. I wanted to interview you, what you thought of the market. Open at the all-time highs, right? And I think it's curious. You would think that rate hike would lead into a bit of a sell-off in the market. It's not doing that, right? So I think people's perception is that in fact, the economy is doing better, and that's supporting the Fed's decision to raise rates. So net, at the end of the day, that's a good thing, right? So maybe they're buying into that game. We also have the buy the rumor, sell the news. So, this market doesn't seem like it wants to go down, right? No matter what. We're not engaging any geopolitical stuff. We're not engaging the uncertainty in Washington. We're not engaging anything. We're not even selling off on the fact that oil has retreated in a huge way over the last 2 weeks. That's normally the trade that brings the Dow up or down, right? So even the retreat in NASDAQ stocks since Friday, right? We saw those analyst reports come out that maybe the valuation on the FANG stocks is way too high, and we saw a complete reversal. That train came to a screeching halt on Friday with Facebook, Amazon, Apple, Netflix, and Google selling off 3, 4, 5%. That followed through a little bit yesterday. It did bounce back after an initial big sell-off, but that's not even selling the market off. Today we opened it at all-time highs. The oil numbers came out, gas numbers came out. I was getting a little help from my friend Charlie over here, who said that the distillers were a little on high volume, that the demand was down 1%, and that so it wasn't about inventories or whatnot. It may have been just a little bit about the fear, the sell-off in oil recently. And the price of oil, it was down 30 cents this morning, broke, and it's now down $1.60. That seems to be dragging the market a little bit down.
Interesting. Well, I want to get back to energy in a bit, but I want to touch on the Fed, of course, because all eyes are on their announcement today. While we understand they're most likely going to raise rates by 25 basis points, do you think that investors are a little nervous that we're going to have a rude awakening as we stop getting spoon-fed, if that's a term? I'm going to coin it right now. And I mean, the data was pretty lousy today, but you're not concerned about that.
So the retail sales were weak, right? And the data's not that great. So net, even though I just said that they would raise rates in anticipation of data-driven, solid economy, the economy's not pointing in that direction. I just don't think they really care. The bottom line is, even in raising rates today, interest rates are still low. We were at zero interest rates for years and years and years, and the market went up thousands and thousands of points. That's free money, right? Okay, so even at 50 basis points, right, that it's still cheap. It's still free money, okay? I think what's interesting, you mentioned energy. So apparently when people started getting out of the tech sector on Friday and Monday, a lot of big hedge funds, their largest holdings were the FANG stocks, right? That they were going to start buying the banks and energy stocks. Those had been under pressure over the last couple of weeks. So there was money coming out of tech and into those two sectors, and I think that's fueling this rally.
All right, well, we do have a lot of rebalances. Which ones are you paying attention to?
So we have a huge gold rebalance coming in on Friday, okay? There's been sort of there's a lot of stuff. If people are interested, you can go on the internet and look up the gold miners and the gold miner junior indexes. Those are being rebalanced relative to some new rules in the S&P and in the indexes, that the capitalization of a company, their valuation has changed, and some of those companies have to get out of the index and some can go in depending on valuation. Big gold rebalance on Friday. We've got an S&P huge rebalance on Friday also. We have the Alerian Index rebalance on Friday. We've got the quarter end and the half year end. So there's going to be a lot of rotation of money, a lot of rebalance. It's going to be a huge day.
It's going to be a huge day. Well, thank you for preparing us for that. It's always nice to have you on the show, Peter. Hope to see you next week.
I'll be here.
This is the Boz on location reporting live from the New York Stock Exchange.